Welcome back to Dinar Community Channel. If you're holding Iraqi Dinar right now, the question isn't if it's real anymore, the question is, how much is it worth to you today? With the official revaluation to $6.20 and live market rates shifting daily, your IQD could mean thousands, even millions. But before you exchange a single note, you need to know the real numbers, no hype, no guesswork. In this video, we break down exactly how much you'll receive based on your holdings, your strategy, and your timing, using real data, real scenarios, and a powerful exchange calculator built for 2025. Stick around, because by the end, you'll know not just what you have, but what to do with it. The year 2025 has been a pivotal one for Iraqi Dinar holders. Following the official revaluation anchored at $6.20 per IQD, Dinar holders have asked themselves the same question: how much will I actually make? The answer depends not only on the dollar rate but on timing, fees, exchange method, and holding strategy. Central to clarity is a robust IQD exchange calculator, tailored to reflect the 2025 reality. A solid baseline is the mid-market rate. Approximately $1 equals 1,310 Iraqi dinars, meaning each IQD is worth around 0.000763 minus 0.000764 United States dollars. Platforms like Z, Wise, and Forbes confirm this range consistently, signaling a stable peg managed by the Central Bank of Iraq. For an accurate calculator, we need two core values: the amount of IQD to convert and the applicable exchange rate. Suppose a holder has 10 million Iraqi dinars. Using today's mid-market rate of 0.000764 United States dollars per IQD, the gross sum is 10 million times 0.000764 equals $7,640 USD. Already impressive but still theoretical. In reality, holders encounter 1. Bank or provider margins, retail rates versus mid-market. 2. Exchange fees or wire charges. 3. Conversion method, public bank, private redemption, OTC, or peer-to-peer. A 1% margin, typical for public exchange desks, would reduce $7,640 to around $7,563, with another $20 minus $50 lost in flat fees. Private programs might offer closer to mid-market, or even better, when tied to deposits or long-term relationships. Let's test with 50 million Iraqi dinars. At mid-market, $38,200. Public bank, 1.5% margin, $37,600. Private program with 0.5% margin, $38,010. The difference, $400, is real value, especially when scaled to 100 million Iraqi dinars or more, where that margin translates to thousands. Higher rate scenarios matter too. If the IQD mid-market moves slightly, say to 0.000766, its 2025 high, the same 50 million Iraqi dinars yields $38,330 before fees, nearly $130 more than $7,600, $7,640. That swing is meaningful to strategic exchangers. But what about the $6.20 revaluation narrative? If the CBI prematurely sets that figure as a redemption rate, the calculator scale flips. 10 million Iraqi dinars becomes $62 million, not $7,640. In reality, official exchange likely clamps at realistic market reflectiveness. Only private programs might phase in elements aligned with RV expectations, often in staged or escrowed formats. This calculator should account for 1. Amount of IQD. 2. Applicable rate, mid-market or private premium. 3. Fee structure. 4. Tax implications, capital gains or curiosity gains in territories like the U.S. 5. Holding strategy, immediate, staged, escrowed. In numerical terms, compare. Strategy: 10 million Iraqi dinars at 0.000764 minus 1% fee plus $50 net USD received. Public bank $7,640 minus $127.40, $7,512.60. Private program $7,640 minus $50, $7,590. Private plus premium $7,640 plus 0.5% minus $50, $7,628. Downscaling or splitting payment across stages changes totals slightly but can help liquidity planning or tax smoothing. For large holders, calculators should also reflect time stage payouts. If private banks offer tiered rates, like base mid-market plus 0.5% for stays over 6 months, then a 100 million Iraqi dinars holder might receive $76,400 at entry, $380 bonus if held in deposit for 6 months. Net after fees $100, $76,680. That's nearly a $760 uplift on the holding, thanks to patience and program leveraging. Some calculators also simulate scenario-based margin and fee entry. Let the user enter percent margins 0.5 minus 2% and flat fee $0 $200 to preview outcomes at scale. Program-related differences move us away from a simple exchange calculator into strategy territory. Public, low barrier, higher cost. Private retail, lower margin, requires relationship. Tiered programmatic, lower margin plus bonuses, requires term deposits. Escrow pool-based, higher theoretical rates, but greater complexity and time horizon. An advanced calculator could plot all 4 options side by side for comparison, e.g., converting 100 million Iraqi dinars via public bank versus private versus program. Another key is mid-market rate tracking. Since IQD hovers in a tight band 0.000760 minus 0.000800, users might wait for top-end dips or peaks based on news. A built-in alert when mid-market reaches XX can help extract marginal gains. For example, at 0.000766, output equals $76,660. At 0.000760, output equals $76,000. That $660 reward might justify a short wait, though at scale with hundreds of millions, fluctuations yield thousands. Personal case simulation. Imagine a builder who ordered plastics from Turkey and paid in USD after swapping 500 million Iraqi dinars. At various scenarios. At mid-market today, $382,000. Public bank 1% margin with $200 fee, $377,800. Private 0.5% margin with $200 fee, $379,800. Private plus 0.5% bonus term $382,800. It's real money, about a $5,000 swing between options. Another example, a diaspora remits parts of their holdings in installments. A user might split 100 million into 50 meters now, 50 meters next month. The calculator can help choose splitting if markets edge up in that period for better yield. Tax planning is another layer. In the US, currency gain from converting IQD above original purchase price may result in taxable gains. A calculator tracking original cost basis and gains alerts users to potential taxable events. If one bought 100 million Iraqi dinars at 0.000600 and sells at 0.000764, that's a gain of $16,400, taxable as capital gains. Always mark zero basis. Not advisable. Tracking is key to reporting. Our calculator could flag likely taxable gains, recommend documentation, and project financial liability based on IRS short versus long-term tax rates. Calculator UX should also accommodate sliders for margin, bonuses, fee, comparison charts, break-even timing, e.g., how long to hold to recoup fees via bonus, export options, PDF receipts, IRS-ready documents. Integrating live mid-market feeds adds realism. Users can test outcomes at current values without guesswork. Understanding that USD IQD remains tightly controlled by Iraqi central bank gives users peace of mind. But even small mid-market changes, like the 2025 high of 0.0007666, matter financially. Another layer is inflation considerations. With Iraq's annual inflation around 3.2% in 2024, holding dinar long-term ties to real-world purchasing power, not just USD value. If inflation outpaces USD interest rates, converting earlier might make sense. To illustrate, a 3.2% purchasing power drop on 10 million Iraqi dinars equals about 320,000 dinar per year, or about $245 at today's rate. The calculator could apply that as a holding cost adjustment. Finally, any calculator should include caveats. Rates change by the minute. Margins differ by provider. Fees vary by country. Bonus eligibility requires program participation. Tax treatments vary based on jurisdiction. That transparency turns the calculator into a planning tool, not a guarantee. By the finish line, users must understand how much USD they'll receive today via different channels, how timing, market movements, and program terms affect outcomes, what taxes or inflation may reduce net gain, when it makes sense to exchange large sums versus smaller staggered installments. To conclude, a robust IQD exchange calculator for 2025 is not fluff, it's essential for today's holders. Armed with real-time rates, margin options, term bonuses, fee structures, and tax alerts, users can project financial outcomes, optimize timing, and maximize returns. The difference between a 0.5% vs 1% margin, or a tiny mid-market spike, can mean thousands or millions in outcomes. It's not just math, it's wealth strategy in one tool.